Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of Moving Iron Podcast is brought to you by John Deere guy Greg, Machinery Pete Peterson on to talk about what's happening in the market. Greg, how you doing?
Doing well this morning, Casey. How about you?
Doing good, man. Doing good. Got to get a special shout out to all the veterans out there on Veterans Day. Thanks for all that you've done, and especially the sacrifice that your families made while you guys were all out keeping America safe. So I appreciate everything you guys are doing, and God bless you guys for being in the military, Army, Navy, Air Force, and Marines. Appreciate you guys for being out there doing what you're doing.
Amen.
Thank you. All right, Greg, let's talk a little bit about what's happening in the marketplace. I tell you, it's here we are, full-fledged auction season. Corn harvest, soybean harvest, pretty much done. Most places you got a week or so to go. Maybe up your way you got a little bit longer. Further north you go, but we're within a few weeks of being done with harvest. Going to go talk to the accountant, sit back and take a look at what's going on in the old tax planning period of time here and going on there. You've watched a couple auctions here of late, Greg. Your synopsis a little bit on what you've seen happen so far, and are you seeing stronger than expected numbers out there as we head into the last weeks of November here?
Yeah, early November has been very busy on the auction front, Casey, and some really interesting numbers coming in from around U.S. and Canada. I think top of mind for me as we're talking here on November 11th would be a sale last Thursday, I think was the 6th, in Paris, Missouri by a great team at Wheeler Auctions and Real Estate. Kirby and Chaz and the folks down there had a dealer reduction auction. I think they pulled in equipment from a number of dealers around the country, actually. And again, sale prices were, I thought, were very strong. Let's start off with a couple, actually two Case IH 8250 combines, 23 model, 319 SEP hours on it. So, really great machine. We're at 346 at a 21 model, 541 SEP hours go for 327. And when I break down the average so far this year on a Case IH 8250, coming in at $261,938, which, if you look at it, is only down 4.5% versus last year's average auction price, which was just up over $274,200. So I found that pretty interesting. Also on the combine front on that sale Thursday, they had a 21 model S790, no tracks. 910 SEP hours on it. That brought 289. And similarly, when you look at the average auction price this year on an S790, Casey, this one's very similar, down only 2.4% this year. Average right now is running just under 324,000. Last year it was just under 332. Now the thing with the S790s, and I think this would be common across, particularly with the green equipment, is the number sold at auction this year is so far down from last year. So if you take S790s through November 10th, we're down 54.8% compared to last year in terms of number sold at auction. So, of course, Econ 101 says when you've got, fewer of something selling, the supply is lower, and that strengthens the price. So on the tractor side last Thursday, similar thing. They had three 9570 RXs, tough to sell three of anything, but late model ones for sure.
Yeah.
All 21s. And they went from 349 up to 363. The 363 one had 778 hours on it. Now here again, if you do the average auction price on the 9570 RX, what you'll find here, actually, it's up 11% this year versus last year. So far this year, just under 306.8. Last year, it was 276,354. But exact same trend here. The number sold of 9570 RXs through November 10th is down 54.5% versus last year. So dealers last year were trying to get ahead of it, and they did. And this is what we're seeing now that's solidifying. We've been talking about basically since the end of February. It's holding here as we push towards mid-November.
Yeah. Okay. Well, that's what we've been talking about all year, right? We've been seeing how stabilizing of the marketplace, stabilizing the auction values, and we're starting to see a trend up, as we start seeing things tick up, and, you start watching how things are coming into play. It's kind of like what we've been talking about. There's no big shockers here. I mean, what we've been talking about anyway. If you've been listening to the podcast, you should be kind of, this is just par for the course so far we've seen this year. So we'll see what happens as we head into 26. But I don't see anything out there that's going to jump out and say, "Hey, the sky's going to fall." So
yeah, when you talk November 11th, of course I've been saying for about 20 plus years now, November, December is go time for buying on the auction market. Number of sales cranks up, but of course, tax motivated buyers usually. Now this year there's not as much income unless you're on the livestock side. But when I've seen early November get off to a strong start like this, it's never dipped through the end of the year. It usually runs out the table, and that's, there's all kinds of confirmation points coming in, Casey. You know me, I don't like to hang my hat on one sale or one item. But this past Saturday, so 3 days ago as we're talking, a nice farm auction in Inwood, Iowa by Zomer Company, auction and real estate. Some really eye-opening figures here. Now, how about now these were low-hour items, but a 2015 8345 hour with 823 hours brought 305.
How many hours did you say had?
823.
Wow. Okay.
So low hours. You expect a premium, but at 305, that's the highest hard cash auction price ever on a 15 model.
Yeah. That's crazy. They brought 305 and it's a 15. That's a big number, And
we'll go down the list now. If you get that's not pre-def either. That's just our magic 10-year-old mark, like we talked about.
Yep.
If you drift into pre-def, they had a 10 model John Deere 7630. Now it's a two-wheel drive. These two-wheel drives from the 80s, 90s, and the aughts are just increasingly hot. Again, low hours, only 1,450 hours, so you know it's going to sell high, but it went for $99,000. Now that's the second highest hard cash auction ever on a two-wheel drive 7630. And the same thing applies on skid steers, even though there's a lot of late model ones out on the auction market. They had a 14 model, so 11 years old, a New Holland L230, only 255 hours. So, but it brought 45,000. That's the third highest auction price ever. So when you have really good condition used equipment, and it doesn't have to be pre-def, it can be like that 10-year-old 8345R. You can see the dollars are together, and the pricing is very, very solid.
Yeah, and you would expect that to that 8R you were talking about there with that brought 305. That's, I would say that's above a premium price. And that would be, I had 845 hours to get all that, but man, for that to be 305, I don't know if it cost 305 when it was new in 15.
Well, that's 36 years. Last week marked 36 years. I've been tracking this stuff every day, Casey. So these patterns don't go away. They hold through the ups and downs of ag cycles. And that 10-year-old mark, particularly when times are challenging, like they have been and are, the gap between what a new one costs is, even at 305, you go price that same horsepower new, you're going to get what you run into. And people just vote with their checkbook.
Sure.
We post this stuff on social media, and a lot of people, it's almost like they get mad. They're like, two idiots met. And it's like, no, don't. I'll keep it clean here, but don't be a dumb, what. The auction method is, you put an asset up for sale, it brings what it brings. You don't have to like it, but it sells for what it sells for. Now, there was another sale actually same day, just on Saturday, 3 days ago. Also, this one was over in Nebraska, Pleasantdale, Nebraska. So it was kind of a little farmer. I can't remember if it was Farm Estate or Farm Retirement. Novak Auction Service had the sale. And this one generated a bazillion sparks on our Facebook page. But they had a 91 model Deere 4455. Again, two-wheel drive. Those are hot. 6,349 hours. So not crazy low, just nice, really nice.
Yep.
Brought $81,000. And that's the seventh highest auction price ever on a two-wheel drive 4455. So I think we got like 1,000 comments. People are like, I thought it was tough in farm country. Farmers are business people. And, if you got to keep farming unless you're getting out. So you got to farm the ground. You need what you need horsepower wise. So your choices are right in front of you. Do I want to go new and pay that number? Can I pay that number? Or, drift into the used market? Now, this is obviously a very well-loved model series, that 55 series, just like a Magnum on the red side. And there were people on the ground or neighbors of this guy that had the auction, and they were like, Pete, this tractor was just right. And, people vote with their checkbook, 81,000. You don't have to like it, but that's what it brought.
Yep. Got to quit paying attention to those bots, man, on your comments, Greg. That's what
those bots.
Poking the bear.
Yeah. I love, well, I used to say I love social media from a business standpoint. Now I'm not even sure I love it, just from the social, cultural disease that those algorithms are ridiculous. But anyway, It is fun to get people together. And our goal here has just always been the same, just to inform you of what's happening out there.
Yep.
And we've been talking about it all year. I think for people that have maybe tapped out from following for a while, and now, okay, we got the harvest in the bin, and okay, well, shoot, maybe I need a planter, a combine. And they're like, oh my God, 305 on that 83. What the hell? We've been talking about this since the end of November. The data has been flatlining.
Yep.
But again, it's coming off of last year when dealers, particularly deer dealers all over the place, but all dealers were just slamming excess late model used out to the auction market to try and get ahead of it. And like we said at the top, they did.
Yep, they did. So let's have a little philosophical talk here. So obviously with the way the market's been, new orders that were not flying off the shelf by any means at all. You saw a lot of different manufacturers that were pulling back, to buy factory layoffs and everything else that were going on around, that there wasn't going to be a lot of equipment, new equipment built. So this time of year when you start watching a few things spike, right? Because, deals have been made. They're just waiting for the new piece to show up. So you start seeing a lot of 25 model stuff, or I guess what we would consider 1-year-old stuff, start showing up in the market. It may not be on the lot yet, but they're saying, hey, we've made this deal. We've got the machine out there, advertise it, so on and so forth. And I thought, it'd be interesting just to kind of see what it looked like and what this meant. So I went out and looked at 300 plus horsepower tractors, combines, and sprayers, right? And just got an idea. So currently 300 plus horsepower tractors, there's 576 2025 model, all makes, all models, all manufacturers, right? Out there, there's 576 300 plus horsepower 2025 tractors listed on the market right now. 2024 model tractors, there's 2,570, just 2024s, right? Combines, there's 477 25s, and there's 1,499 2024s. Sprayers, a little bit of different flip here, but there are 711 2025s and 620 24s, right? So that a little bit of different flip there, which kind of surprised me a little bit when I went back and looked at just because of what it was, but that's where we're at. The point I want to talk to you a little bit about is if you start looking at where the 24, 23, 22 model stuff kind of falls into the mix, the driving factor behind that is, yeah, you don't have a lot of 1-year-old 2025s hitting the marketplace, but you got these 24, 23, 22. And what does that mean for the marketplace as you start looking at this? I'm not saying it's going to prop up the value of a 24 or 23 or 22 or something like that, but it's going to make it be a little more desirable, right? Because if you're looking for a 1-year-old machine, you have a pretty small window of equipment to go get after. But if you're looking for a late model, low-hour machine, which that means a lot of things to a lot of different people, you have about 3 or 4 model years there that you can really take advantage of right now that are going to do that. When I was thinking about this, what immediately popped in my head was the 12, 13, 14 model year stuff, where there's so much of that stuff on the marketplace. Hell, even today you can go look at it and still see a huge hump in there in the market where those machines are at. My thought process are the 24s, 25s, or 23s and 22s, are they the new 12, 13, 14 model machines? And I think that's what does that look like, and how do we work our way through that? The biggest difference is the significant change in price, number one, and number two is with there being a lack of new stuff being sold and that 1-year-old stuff coming back to the marketplace, there will be more demand for these machines than there were the last time something like this happened.
100% correct. You've identified right there, Casey, with hard data, an important point that I've been trying to, get across to the farm audience all year is that open your eyes. This is different than we've ever seen before. So when you said those 300 plus horse tractors and combines, the number of 25 models on the market now, that huge cliff drop off in number, that's manufacturers just quit making them.
Right.
Now, I've got 36 years doing this. There have been other downturns like you were saying, 13, 14, 15, and you can go way back into the late 90s for me.
Yep.
Manufacturers were not able at that point, partly, frankly, people won't like this, but there were way more dealers. There aren't as many dealer owner groups now, so it's easier for the manufacturer and the dealers to collectively act, and they just shut off production.
Yep.
So 100% will work towards, you could say propping up whatever. It just is what it is.
Mm-hmm.
Those good we just saw it. I mean, look at what that 23 model 8250 brought, $346,000. Now, if there was a slew of 25 models sitting on dealer lots, it ain't bringing 346.
Right.
So really, this is a huge, the biggest change I've seen over my 36 years is the used farm equipment space technically is so much more efficient and faster and more responsive now. Now, the bad part is if you're a farmer, in the past, coming out of these down cycles, there were deals, significant, and it was hard as a farmer to pay for them. But you can see what's happening. And so if you put a buoy in the water right now, what you just identified and what I'm talking about with these auction prices, at some point down in the future, when corn and beans go up and stay up, that's what I'm really concerned about on the farmer side, because you got to have the horsepower you need, and they've been stretching, extending the life of their used equipment right now. So I just see like a tsunami warning in the future. And again, this can seem really like far out. You're like, what the hell is Machinery Pete talking about? Auction prices or demand for new sales are going to skyrocket. I'm not saying when it's going to happen, but it's going to happen because what you just said, they cut off production on the 25 models.
Yeah.
And so, in fact,
it's not going to be any better in 26 either. And that's the other side of that. So.
Correct. New sales are going to be pinched. And in fact, if you went back to the last downturn, and I talked about often when we chat how our auction data showed right at the very end of 2015, I could start to see that little, it's kind of finding footing now into 16. But in 2015, on the dealer side, I mean, you were in the, how many new machines or 1-year-olds? I mean, every dealer just had a bazillion of them.
Yeah.
And they were looking to lease these new machines that have been on the lot. Now, leasing has not been a thing this time because there's no 1-year-old product sitting out there. You just said it's like 500 versus 1,400 last year.
Yeah, that's one thing too about on the leasing side that people need to remember as well is that there was a huge section of used equipment that nobody knew about except for the dealer groups, right?
Right.
Because the captive marketplaces, whether you were John Deere Financial, whether you were C&H Capital, whether you were AGCO Finance, whether you were, Ag Direct, whoever it was, right?
Was an
ocean. An ocean of stuff that really nobody knew about, right?
Right.
So you thought there was a lot of stuff on the market then. There's about 25 to 35, 40% more inventory that really was just not on the marketplace yet.
Right.
And it wasn't on the marketplace because they were trying to keep it through their dealer channels. And
right.
Today, that's not like that the other day because leasing it's nothing. That Wild West show is over with, man. That it's a totally different animal now. And as you watch how things play out. So one of the things I will say, Greg, when I look at these numbers here, so I just go back and look at 22 through 24 model stuff. And there's 5,600 300 plus horsepower tractors on the market, right? There are combines. There's just a tick under 4,000 22 through 24 model machines out there. if you take a look where 26 is going to fall in at, 26 will be a little better than 25 as far as new order,
Okay.
but it's not going to be much. It's not like we're going to, oh wow, we're up 50%. If they're flat at best, that's going to be a win in my opinion
Right.
for 26.
Right.
So as you start watching these things roll through, on the backside of all this, 27, 28 rolls around, things get better, more money comes in on the farming side of it. I can't point to a vision of the future where I see a lot of new equipment coming back into the marketplace being sold. Because Aaron Fennell we had recorded him a little bit earlier. We were talking about this, that we had a lot of conversations with folks early in my career that, hey, this is the last machine I'm going to buy. I'm going to retire in the next 5 years or whatever. That's my plan. And so I'm finally going to buy that new tractor, new combine, new planter, whatever it is. I'm finally going to buy that, and I'm going to go off into the sunset with this new combine. That was back when combines were $235,000, $250,000, those kind of things, and you could still do that. You could still swing that. I've got a used tractor fleet and I buy new combines type of thing. Today's marketplace, you can't really do that. I mean, I'm not saying you can't. I'm just saying that it's not as easy to swing. I'm gonna run used tractors and buy my one new combine every year. It's just that it's just getting harder and harder and harder for that to happen. Where I think some of this pins us to where we're at now is as you start looking where 27 comes into play and then stuff that comes in there, it's just going to be hard. I don't see that many people coming into play say, hey, you know what, I'm going to buy a brand new $600,000, $700,000, $800,000 something, and then hope that I can make it pencil out on my fleet where, they can't afford to have, hey, I can buy a $500,000 used combine and which is crazy to say, and, buy a $350,000 or $400,000 tractor, so on and so forth, as you kind of roll down that line. I see more of that coming into play. So as bad as things are right now and as bad as used inventory feels right now, I think we're resetting the marketplace, open a bigger door that says, hey, we're going to have a supply of new equipment that comes in every year. And that 1-year-old stuff that does get traded in, it's just not going to be in the grand supply that we're used to seeing it come into
Exactly.
as we come out of downturns. And I think that changes the dynamic of not only how functionally things are getting sold at the dealer lot, but also, like you've been talking about, how things get sold at the auction block.
Yeah, 100% agree, Casey. To me, it's the old, when these, the pandemic, it's a 100-year event, and all kinds of things change in our culture coming out of that. And so for our farm equipment world, to me, the truth now is, hey, we've moved to a model where you buy it and then we'll build it for you.
Yeah.
And that's just, you got to pull back here, but if you think of it from the manufacturer angle, versus like even a decade ago when it's like they're smashing out, and you said it, the farm audience didn't even see the ocean of new equipment that wasn't even available. It was just an ocean. Now, if you're a manufacturer, that's problematic. That's bad. If you're a dealer, that's bad. Now, it's not like that now. Once you train the audience, right or wrong, you buy it and I'll build it for you. If you're a that's what you want. And that's what we're moving towards. Now, it'll keep playing out, but I think for sure that's, to me, will be one of the big changes in the pandemic coming out of it. Kind of normalize that, oh, my dealer only has 8 planters to sell this year. Well, I better get my name on the list.
Yep.
And even though you're not doing it last year, this year, or maybe in 26, what we're saying is whenever the farm income starts to go up for whatever reason, that's it's 2021. That's what you're going to have.
Yeah.
And so the real opportunity now on the farm side is, again, call your local dealer. Look, that's why we compile these auction prices. It wasn't just 2 guys that wanted that 8345R 10 years old with 800 hours on it, and it brought 305. So the other piece on this, I think, Casey, is, this downturn is stretched out long enough now. Guys, maybe stepping away from mud deals as their dealer was stepping away from them. And then enough time has gone by to analyze, even when the money starts flowing again, do we want to roll like that? That's an open question. Whether farmers will jump back in and buy 5 combine, I don't know. Yeah. But what I hear as I travel the country is farmers are starting to say, hey, we're not gonna do that again. Just like dealers a decade ago were saying, well, we won't put so much in on trade. We can't get stuck like we got stuck. Now we'll see what happens, but while you're chewing on this, understand, especially on the farm side, like we're talking about, the world has changed. It's different than you've ever seen it before.
Yep. And if you look at how farmers are taking a look at stuff they're doing and how those things are playing together, just like you said, the idea of hey, I only got 8 planters to start, or something like that, and you start looking at, hey, my normal trade cycle is going to be 3 years on a combine, 5 years on a tractor, and every 4th year I'm getting a planter or something, whatever that mix looks like, right? Those conversations you start having with your dealership they're a lot sooner and a lot further out, right? So
Right.
if you want to have a used planter for the 2027 market or planting season, you kind of need to start having that conversation with your dealer in 2026 order writing period. Hey, what do you have coming in on trade when that new planter hits? So, because that's when you're going to get it. You're going to get that thing either whenever that planter comes in, 4th quarter,
Right.
or the 1st quarter of the year type of thing, so that you can start having that conversation, right? And it's not everyone listening to this right now saying, Case, you're full of crap, because I'm driving by my lot right now and it's filled to the gills, and you're exactly right. But as this starts to chip away and things start to warm back up, and your choice is what's sitting on the lot, because there's not going to be a lot of new slots available. And if there is, there's a select group of people that are going to be able to go and get those new machines, right? Just because of what they cost. And even those guys are starting to pull back a little bit, saying, like, do I need 5 tractors, or do I need 3? Right? What's it look like if I do have a 1 or 2 year old machine and not buy that new one, right? Like, what's that look like? So that conversation is broadening out quite a bit,
Mm-hmm.
right?
Absolutely.
So all that stuff, what I'm getting at is all that stuff's going to start eating into that inventory levels. And as that stuff starts happening, the competition for those used pieces starts to expand a little bit, and it gets tighter and tighter and tighter, to where your conversations you need to have or start, one thing I encourage guys to do a lot, if you're a used buyer and you're going to be a used buyer, let me spec the machine that I'm going to send out to the new guy the way that you want it. Because typically the new guy that's buying it every year, they don't necessarily care about the specs, right? They do, but they really don't at the same time.
Mm-hmm.
Whatever gets in the best cost per hour trade difference, that's really what they're looking for. So if I know that I can go to Greg, you come and say, hey, Case, I'd love to have a planter with X, Y, and Z. You think you can help? Yeah, actually, you know what? I think I can do this. Let me talk to this guy over here, and I'll get it spec the way you want to. And it comes back, you'll have a used machine. Here's the price it's going to be. We already know the price. Everything's going to be the way it's going to be. And you can start having that conversation. And it really puts everybody in a good spot, right? The dealer's in a good spot. The new guy gets a good spot because of the position that they're in now, and the ability for the new guy to, and then you get a good, as a used buyer, you get a good position as well. And I think those are the things that, if you can put those things together at the dealership level and at the farmer level, man, I tell you what, you have a recipe for a really good outcome on your used equipment space.
That is tremendous advice for the farm audience. I mean, to go back and just rewind what Casey just said, because be proactive in your relationship and verbiage with your dealer, and frankly also your lender. The times, and farmers are independent people, just like you and I, Casey, and I myself am a procrastinator. It's a trait I've fought my whole life. It makes life more difficult. It's just, don't be a procrastinator now. It's becoming more problematic. If you sit back and wait and hold your cards close, you're missing opportunities. You painted a picture right there, Casey, for a reason to sit down and be open and honest with your dealer. And as a dealer, I mean, how much would you appreciate that? Your customer coming to you saying, hey, here's what I'm thinking a year or two out. I mean, it makes your job easier.
Yep.
It's and I'm the son of a 3rd-generation dealer. And to me, the farm equipment business was never about moving a tractor, a combine. It was the relationship with the farmer, because a dealer, you need your farmer customers to be healthy, even through these difficult, pressure-filled times. So all the more reason, I like visiting with young sales guys on the dealer side, Casey, when, there's a lot of ways to go about that, but I love the guys and gals that are going out to the farm. You're not going to sell a 25 or 6 model, but hey, what are you thinking? And look, for all the reasons you just said, that's tremendous, tremendous advice.
Yeah. And that's something we tried to do a lot when I was working at the dealership, was we tried to piece those things together the best we could. And, the ones that we could do that with, it worked. And it worked for everybody. So, but the long story short of it is, there's also a ton of then the advantage of doing that was we know we got one, we don't have to worry about that piece anymore.
Right.
That now it's like, I'm still saying you have to worry about those pieces, but again, if you're really thinking about being a used buyer and being a used buyer of, hey, I'm going to work through these things and work through the cycles, and this is how I'm going to try to grow my efficiencies through my operation with updating my equipment, during these time frames. It's not going to necessarily look and feel like it always has. It's going to be a little bit different than what we've seen in the past.
Yeah, and again, that's why we go back to the auction prices, and I just love compiling them and making them actionable for people, whether you're looking to buy, sell, or trade, or just appraise. What's my stuff worth? Right. To eyes wide open. Don't deal off of the old gut level of, well, my gut's telling me I should. Gut level instincts are super valuable. I'm not saying they're not, but the information on a daily basis that's coming in. And we're talking here now today, as we're talking, our friends at Merit Auctions, Zach Heiner, they've got a very large dealer auction with beautiful late model equipment from a number of dealers. So we'll grab those numbers and flow them right into Machinery Pete. So you can see what this thing sold for today, like that S790 or an 8250 or whatever it is you're looking at. And we put this so you can have it. So, make better decisions. And that, applies on the lender side too. The lenders are trying to figure out, well, we want our lenders to dive into this stuff and be, up to date on what it's bringing. I travel the country, Casey, auctions and ag events and stuff. And I know we're humans. I don't like general statements like, things are terrible. Well, let's get more specific.
Right.
Yes. Okay. There's financial stress. Now let's try to measure it and then deal with it as such. If people that just hang up on the generalizations, they're going to lose. They're not going to make optimal buy, sell, trade decisions, in my opinion. So.
Yeah, I agree.
End of sermon.
Right. I'm like you, I procrastinate to the last possible minute, and I get what I get because of that, right? I don't necessarily get the best deals on the plan. I don't necessarily get the sell. I don't get the little things that pop up when you actually plan things out. But it's shocking when you do plan things out and you execute your plan, it doesn't work out well for you. So.
One more piece of Machinery Pete life advice. If you are a procrastinator, guy or gal, if you can in your life partner find someone who is not a fellow procrastinator, I think this can make your life 1,000,000,000% better. Mrs. Machinery Pete, she ain't a procrastinator, and that helps us immeasurably. So
yeah. I can imagine having two procrastinators trying to make a decision and get something done. That'd be rough.
I don't know. No, I don't even want to dream about that.
Yeah, very much so. All right, Greg, good place to stop. Folks want to reach out to you, have you come to their auction or check out some speaking events you have available. Best place to do that, just go to the contact page over there at Machinery Pete.
Yeah, our toll-free number's on there. And hey, folks, if you're listening to this, if you're around Ohio, Indiana, Michigan, Saturday, I'll be out in Valparaiso, Craft Auction Service. It's the day 3 of their collector auction. And man, you want to talk some vintage tractors and trucks on this sale? It's going to be so much fun. We're filming it for the TV show, so hope to see you out there in Valparaiso on Saturday.
Right on. Well, Greg, appreciate you being on the podcast. We'll catch you again next week. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast Markets with Sean Hackett. Sean Hackett's with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the marketplace. Sean, how you doing?
I'm doing really good from frigid South Florida.
Frigid South Florida, yeah. This is when I say everything's relative, Sean, and we go from there.
Well, we broke the 50-degree mark to the downside for the first time this year with howling winds. So we're all moving out of the States because this is not what we signed up for.
Not what you signed up for, right? So when it gets to 50 degrees, since water freezes at 49 degrees in Florida, do you blow out your sprinkler system down there this time of the year?
All the pipes burst. Yeah. We have pipes that are only good for up to 50 degrees, and then everything blows up.
Yeah.
So all the lizards fall out of the trees, and
Oh yeah, you guys! I forgot about that. You guys got to watch.
Yeah,
those
I mean
falling.
it's a health
kinds of
hazard. You know,
hazardous
it's chaos down here right now.
Yeah, get your state issued hard hat out. You know what I mean? So you guys can walk around.
It's snowing. It's snowing lizards.
Yeah. Yep. That is. I forgot about that. When it gets cold like that, they tend to free fall out of trees like that.
Yeah. All you have to do is just like they call it lizard tipping. You just touch them and out they fall.
Lizard tipping. That's it. There you go.
All
right.
It's like cow tipping, with lizards. So
just a lot smaller, totally different. Yeah. Right on. All right, Sean. So speaking of tipping, we've got the USDA report coming out here Friday on the 14th. Been a while since I had one out. A lot of things have changed since then. Any expectations of what you think the market might do, or what this might look like, or
First of all, I want to know how they're able to put this report out, because supposedly they can't put any other reports out. Supposedly, USDA isn't working. They've never put a report up to my knowledge on any government shutdown in the past. They didn't put October's report out because nobody was working. So how do they? Who did they get to come in and do this? I'm really skeptical about how they're able to put a report out, like a legitimate report out with actual facts and figures that we can trust. I'm really skeptical about what this is. I don't understand how they're doing it. Like, how did they pull this one off? I don't have high expectations on this because I don't think that they are. I don't think they've been able to do a full analysis, and I don't really know what to make of it. I know what they should say, Casey. What they should say is corn yields under 180. And I think what they should say is that probably soybean yields are probably close to right, maybe a half a bushel below where they were in September. I think that's what they should say. But I don't think this is a report that we can rely on. I don't think they're going to come down that much. I just don't think they have the manpower or the woman power. I don't think they put the facts together. I almost feel like they were forced to rush and put a report out in the grains due to pressure or something. I still say I wouldn't hold my hat on this report giving us the truth. I guess what I'm getting at. I think the January report is still the report I'm hanging my hat on as a report that they're going to really make the big time adjustments and try to get the crop production correct. I think this one, I think they'll make a few little changes, but I don't think it's going to be anything that's going to provide a wow factor. I could be wrong, but I still would like someone to actually give me a call and explain to me how this report's going out when they're unable to put any other reports out, and we're unable to put the October report out. What allows them to put an accurate November report out? I know the government's going to reopen now, but it's too late for November. So it's just interesting to me. I just don't know I don't understand the process. I wish I did. So
yeah, I've been thinking about that too. Like if it was impossible to do that in the past, why is it possible now? And you start looking your way through that. How much of this do you think the trades got built in already? Like, what do you Do you think they're anticipating seeing something one way or the other? Do you think similar to what you're talking about right now, they're kind of like, I don't know how this is going to.
Yeah, I think most people, if you look at most of the estimates that are being put out by some private firms, StoneX and others, they're up a little, they're down a little from September. They're not. No one's making any major adjustments, and I don't think. I can't imagine the USDA is going to make big adjustments in this report when they really haven't been able to do the work. They haven't been able to do the work.
Yeah.
So somehow, whatever happened inside politically, they felt they needed to put something out, and they're going to do that. But I don't have high expectations that this is going to be a market moving report. I don't, and the private estimates are suggesting they don't see it either. And I think we're just going to have to wait until January to get it. In the meantime, until January, I think we're subject to basically, now that the government is going to open after the House votes on Wednesday, we should start getting some reports out, like weekly export sales, maybe later this month. And we should start to get some flow of what's going on with trade and stuff. So we'll have to go off what's going on with exports. How much is China buying, not buying? The Supreme Court is going to be making their decision here sometime between now and I think just after Thanksgiving. We need to pay attention to what they say and how that might impact market psychology. But I think that's kind of where we're at. A lot of talk about the Federal Reserve governors backtracking on whether they want to reduce rates again in December. Some do, some don't. Obviously that'll have a lot to do with how the dollar is managed and what kind of inflationary expectations. What I will say is this, Casey. One thing that the government shutdown prevented government capital going into the private financial markets. So about $1 trillion should have gone into the financial markets in the last 40 days. That did not go in because the government was closed. When they reopen, that $1 trillion will get pushed into the economy into the end of the year. That usually means that risk assets, commodities, stocks tend to perform well when you're shoving short-term liquidity in. And then Trump is saying he's going to hand $2,000 out to everybody as a tariff dividend benefit. And he's proposing this. And history says if you actually directly hand money to people, which is what's called direct monetization policy, you'll get some increased demand. Short term, you'll get some increased demand for people to go out and they tend to spend it. So for all those reasons, I think we're probably going to have a good finish monetarily into the end of the year. And that means commodities should at least have the monetary winds at their back. And if we can get any kind of good news on China purchases here and there, we might have a decent finish to the year to kind of continue what's been a nice little rally here, generally speaking, in grains since the trade truce, was solidified here at the end of October. So
yeah, okay. Let's talk a little bit about natural gas. You talked a lot for the past 6 months about this winter and what it looks like, and we got our first real shot of cold air over the past week or so. And you talked about there's a hard line in there between East and West. If you watched college football at all this weekend, you saw a lot of games in the snow on the eastern side, and you watched a lot of guys in T-shirts on the western side of that line, like you talked about. Sean, as you're looking at this, natural gas is going to play a big role in what you're seeing. If it is as cold as what you're talking about, you're going to see a lot of draw on natural gas. As you're looking at natural gas right now, what are your thoughts?
Well, I want everyone to understand why we've made this forecast for a while now, that we were going to have an eastern-based cold winter, which is really where natural gas demand comes from. I mean, no one lives in South Dakota. Doesn't mean I don't like South Dakotans. It just means no one lives there. No one lives in North Dakota. No one lives in Montana. So it can be minus 50 degrees. Natural gas demand is not going to be up much. Okay. Now, if it's 0 degrees in Ohio, natural gas demand is going to go up a lot. Okay. So that's the difference between eastern-based coal versus western-based coal. And two reasons that are the backdrop for the two reasons why this winter should be eastern-based cold is that we have a negative quasi-biennial oscillation, which are these upper stratospheric winds that's going from east to west. And we also have a near record snowpack in Siberia. Both of those variables have tended to be very, very highly correlated with weakening the polar vortex on a very regular basis. And if you weaken the polar vortex and you distort the polar vortex, then that very, very bitterly cold Arctic air can find its way meandering down into the lower 48 states. So that's the backdrop of, and by the way, we are already we are seeing a sudden stratospheric warming event developing in the Arctic right now as we speak.
Saw that on the news the other day. Yep.
Yeah, and it's going to reach full bloom around Thanksgiving. And the key is the way you look at it, you can have a sudden stress forming in the upper atmosphere, and it could stay there, and it doesn't necessarily impact our temperatures on the ground. But if that cold, distorted polar vortex winds its way to the lower atmosphere, they call it reversing the winds. The winds get reversed, and so it screws itself into the lower atmosphere. Then that translates to cold on the ground. So what you do is you look at 10 millibar temperatures over the Arctic, which is your high level, and then you look at 30 millibar, which is the lower level. And it does look like that we're going to get a translation from the 10 millibar to the 30 millibar, and we're going to get this connection from the top to the bottom and create a true polar vortex type of airflow pattern. One way of representing that is something called the EPO, or the Eastern Pacific Oscillation. And when it's negative, it means it's this oscillation of cold air coming in from the Arctic in an EPO standpoint. So we're seeing already, it's very unusual to get this type of a scenario in November. Usually this is more like mid-late December into January you get this. So we're all off to an early start already, which is suggesting that what I've just mentioned, we're already seeing how this polar vortex is already struggling to keep itself together. Now, further things that emphasize eastern-based cold. Cold North Atlantic has a teleconnection with eastern-based cold. A weak La Nina to neutral negative that's eastern-based cold. Warm sea surface temperatures off the southwest coast of California, which we have, eastern-based cold. So all these teleconnections are in place to drive cold and considerable snow, by the way. Just this past week, I think our snowfall was up 80% from last year on a national average because of all the snow that we're getting, in the northern tier states, especially the eastern northern tier states. And that's going to be a common feature throughout the wintertime. So all this says that the heating degree days should be top 10 again, like last year, but could be top 5. And we have record all-time demand for LNG exports. That's a fact, not a forecast. We already know we have that. And we know that the domestic demand for power, for electrical power, as our electrical power grid is expanding to basically provide all the power for all these data centers that are power hungry to develop this AI capacity processing capabilities. A high percentage of that power upgrade is from natural gas power plants being upgraded and expanded. So you have that domestic demand that has nothing to do with the weather, and that export demand has nothing to do with the weather. That if you add a top 10 or a top 5, is just to give an example. Natural gas production year over year, I think last week, just as an aside, I think natural gas production was up 4.5%, I think it was last week. Demand is up 14% year over year. So production up 4.5%, but demand up, demand is we're at the bottom. What I'm trying to get is we're in a much tighter situation over a year ago because demand's outrunning the ability to produce. And then if you add then, above normal heating demand in the wintertime on top of that, and if you get any kind of freeze offs, where the wellhead actually freezes and you lose production 100% for maybe 3 or 4 or 5 days, depending how long that, a barely cold air comes in and freezes it off, then your production actually could go negative for a while. With demand, this is how you get your drawdowns to just collapse. So that's the setup. And I'm, how can I say? It's not that I'm looking forward to nasty weather. I'm just trying to make a forecast. But seeing a Southern Stratford warming event already developing in mid-November, and based upon our forecast that we would have a very unstable polar vortex this year because of all the things we've just mentioned, and it's now verifying. I mean, I'm very optimistic that the forecast we've put out there months ago is going to happen, and that natural gas prices, at where we are today, are not appropriately priced for that type of drawdown. And another thing is, last year at this time, we were way above our 5-year average in storage. Right now, we're about at the 5-year average. So our capacity to eat into big drawdowns is a lot less than it was a year ago. So I just think we could get in a lot of trouble, and the market will have to ration the way what's going to happen. You're not going to ration demand for power. That's the AI guys got endless capital. You're not going to ration those guys. You're going to have to ration LNG exports. Or, Trump's going to say, we're going to not allow any more exports. Remember Biden did that a couple years back? He threatened that, we're going to stop people from exporting LNG so we can get our prices down. So that's to me, so I think that's where we're heading. We're heading to some kind of a retest of those highs from a few years ago, if my forecast is correct about the weather, on top of these other drivers. And natural gas prices, are starting to, if you look at the chart, they're starting to turn up here. We follow an ETF called U, N as in Nancy, L as in Larry. It's a 12-month strip price, meaning it looks at the forward 12 months of natural gas, and the ETF trades the average 12-month price. That's what the ETF trades. And so we just follow it, because if we're going to have a bull market in natural gas, it should be not just the front month. It should be like all prices are rising. Like, that's a true bull market, is when everything's rising, right?
Right. Yep.
And if you look at that, we're about to break through 820 on UNL, which is a significant overhead resistance level on the 12-month strip price. Any break on a daily or weekly basis of that ETF above 820 would say that natural gas prices as a whole, not just the spot, are starting to break out to the upside. So I think we're right at the point we're ready to chart break this out. And once natural gas starts to move, it's a fast one. It really moves. It's a wild when it moves incredibly fast. So I will reiterate one last time that if you're someone that's a physical buyer of natural gas or propane or any derivative off of that, and you don't have all your physical needs taken care of, I would strongly suggest that you take care of business and button it up, because prices are still, although up a little, still pretty attractive from where I think we're going to be come, let's say, February or March.
What kind of, as you look at fertilizer prices, how do you think, is there enough time to really start affecting those fertilizer prices for the spring, or do you feel like that there's enough lag there and supply and those kind of things out there that shows there could be some abbreviation of that in the fertilizer prices?
I'll answer the question this way. I don't think there'd be a reason at this juncture for spring prices to go up much, but they probably will go up anyways because
they can.
Because the fertilizer companies can get away with it.
Yeah.
They can justify, hey, see that, I mean, there's what should happen and what actually will happen. Yeah, I think for nitrogen-based fertilizer prices would go up in a scenario like that. I don't think the fertilizer prices could contain themselves, and they're going to see an ability to make extra money, and they'll be able to get away with it. So the answer is, I do think it'll impact price psychologically. It'll do it, and the market will just, it's just the way, it's just the way it is. It's just the way it is.
Okay. All right, Sean, good place to stop. Folks want to reach out to you, get more information about what you're doing over Hackett Financial. What's the best way to do that?
Our website is Hackett, Hackett advisors.com, Twitter page at Fairnix11. We have a LinkedIn page. We put some stuff out there from time to time about what we do, how we do it, why we do it, to see if our cycle statistics and correlations will be of value to those that watch your incredible show that I'm blessed to be on each and every week. So,
Sean, appreciate you being on, man. You make it pretty easy for me to talk about this stuff. So thanks for being here, and we'll catch you again next time, man.
Sounds good, Casey. Look forward to it.
With that, stay tuned for more Moving Iron podcasts after these messages.
Well, there they are, mocking you.
See you next year,
Loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Get the latest markets, weather, and rural news whenever it works for you. Farm Journal TV is on Roku, Fire TV, and mobile. Try it for free for 14 days and take ag with you everywhere.
All right, welcome back to Moving Iron Podcast. Got Aaron Findle back on to talk about what's happening in the marketplace. Aaron, how you doing today?
Well, hey, everybody. I am just terrific today. We got a sunny, calm morning to start here on the high plains, so we'll see what happens. Supposed to be 60s and 70s all week.
Yep. Yeah, I'd say
and then crappy 40s all weekend, so here we go.
Yeah. I'm sure the wind will blow and howl and everything else.
Well, that's a given.
Yep. It's been a relatively uneventful fall, which is cool, right? I mean, we got harvested. I think looks like most corn's been picked about everywhere, and probably a week, maybe two left, and we'll put corn harvest in the books for the year. Sugar beets, obviously, they've been dug up and out for about a week because I can't pass a truck on the highway anymore without running into a beet hauler somewhere in the mix of that. And so that's all.
Now instead of cages and live bottoms everywhere, it's all the rehaul trucks.
That's right.
From now till February.
Yeah. Moving sugar beets around. And so that's happening. So as you sit back and look, one thing that I've always found when you get to this time of the year was depending on when harvest got done and how things went during harvest and what overall markets looked like, you got a decent amount of time. You know, we've had harvests where harvest got done the week before the end of the year. And we've had harvests where we had 2.5 months to make decisions about end of the year buying. This year kind of falls kind of where it's a normal year, right? It's not too crazy. Here we are, middle of today's the 11th, Veterans Day. So
on that point, real quick, Casey, nowhere in the country was there anything very adverse.
No.
You know, nowhere. I realize the Eastern Corn Belt was damn dry for them. Let me reiterate, for them. And we didn't burn up out here. In fact, we were, dare I say, slightly wet part of the year out here. There was nowhere had a train wreck in the country.
Yep.
You know, it's not like the upper Midwest was, oh man, we hit October 1st and now we're towing everything through the field and all that kind of biz. I mean, it's kind of good with so much of the other crap going on in ag right now. Yeah. Weather hasn't been part of it.
Yep.
I mean, regionally little bits and stuff here and there, but as far as the national grand scheme of things, it's been pretty slick year.
Yeah. Yeah. And that's kind of what I was getting at there. It's just been, easy goes, easy goes as you work your way through. But, ultimately at the end of the day, here we are in mid-November. You've got about a month and a half to start thinking about end of the year decision-making processes and those kind of things. Got a big catalyst coming up this week on Friday. The USDA is putting out a report about the ending stocks and supply and all that fun stuff. And that
that lambs on feed report we've been waiting a few years for.
No, it's absolutely not lambs on feed. But it's going to be one of those things. So we haven't had a report since when? September, right? You missed the October report.
Yeah, so I believe September.
Yeah, so September. So it was. So you're. This could be a real game changer, right? Because remember the last report the USDA had was at 189, right? That's where they had corn pegged at, and then StoneX was at 195. And as you work your way through that, this will come back in, and it'll probably be talking to all the guys that come on here and talk about where pricing and commodities and those kind of things are.
Right.
They're all thinking somewhere between. They were all kind of trend lines, so like 182, 183, something like that, 181, somewhere in there, 180, something like that. But I've read articles where as low as 178, as high as 175, so somewhere in that mix. It'll be interesting to see what the USDA comes back in at after they do all this fun stuff, and it will be interesting to watch how that affects the market, if that drives anything. But at the end of the day, there's not a lot of capital to be tossed around right now at the end of the year that for any tax purposes, right?
No,
that's
right. Just like you said, it's happy buying. Just happens to be at the year end.
Exactly.
Now that we know what kind of wreck we have, now we can venture forth.
Yeah, and as you're watching all these things kind of come together, I think it's setting the table for kind of like what we talked about here a little bit. A little bit in the past is that you're seeing the stability in the marketplace being formed, right? Which that doesn't mean it's the only thing good about a stable marketplace where you've hit a formidable bottom, right? Is that it's not going to go down anymore, right? And I've been trying to watch those sales bills come through and those kind of things that pop up. I still haven't seen that we're taking 45 combines and 60 tractors to auction right now. You're seeing a lot of onesie twosie stuff come through.
Oh, for
right?
sure.
And then you would expect that, right? That's not like that's out of the ordinary. But I don't think we're going to see a market moving event until spring of 26, if we see anything at all.
I would venture to say that on the dealer side of things, they're choked down enough is maybe the right word, that we're just not going to see that in 26 either. I think we had two modes of action in the dealer world. There was the, what are we saying, end of 23, right? Yeah. Late 23 through all of 24, dump at auction. And then there was the internal programs. Let's move a chunk, and everybody ends up at the same place, right? With a manageable, not healthy, but a manageable level of inventory. Well, if you're within your management dome, if you will, parameters, if you're within your management parameters, you're I guess full steam ahead maybe in what you're doing, but you're not at a point where, oh man, what are we going to do? Which takes, that's why I don't think there's going to be any kind of big whammy in first half of 26.
Right. And if you're going to see it, I think you would already kind of have, if someone's going to do something in March or April, by no means is there going to be a sub L out today saying, "Oh, in April we're going to do this," whatever. But you could point to a few things and you could see a few things come where that kind of stuff is going to happen. If you look at where commodity prices are at right now, and you add, like we talked about, you add 50 cents to corn, and you add at that point would be $1.50-ish to soybeans. It's a different story a little bit to some extent, but there's going to have to be a lot of help that dramatically changes to get that to happen, right? There's a lot of things that have to change. So one of which is an understanding where the market's at as far as what's supply look like, what's harvested. acres look like and where those things come down. So hopefully we'll have that here in November, because that's, by November across the country, you have a pretty good snapshot of what the bulk of harvest looks like. You don't know that until January, but work our way through there.
Another thing that I would say why we're not going to see that any kind of 26 reset. And keep in mind, if you're listening to this, watching this, I know nothing. This is just my feeling.
It's a given.
Based off experience and trying to pay attention. There is very little 25 stuff out there, buddy. Very little.
Well, yeah, because that just shows you how it,
I know. So what I'm saying is 24s are not a bad thing to have on your lot right now. 100 of them are, regardless of what it is. Sure. But whether it's the end user, the other fellow dealers, what have you, late model, low houred, it's just a couple of years late, but it's back, everybody.
Right.
We're back into that. Well, there wasn't no new ones, so find me a 200-hour 24. Oh, where am I going to find that? Well, there's here, So I think what needed to happen happened. I just didn't think it would happen to the level it did to help to the level it has.
Yeah, I was thinking about this the other day, and you triggered it in my head when you said what you just said there. Remember,
that's what I do. I trigger lots of folks.
You should definitely do that. So remember back in coming out of 2012, 2013, 2014, those models came around, and there were a ton of those models produced, and it was just like you could watch them move across the spectrum. There was always this this curve, you get the curve where it'd go like this, and it was like 10, 11, 12, 13, 14, or 11, 12, 13, 14, kind of down here like this. It would kind of work its way through. But that little hump was always there, right? Because it was just a big slug of stuff.
Like for 5 years, guys would call and be like, I need a combine. Be like, great, what do you need? I don't even really care as long as it's not a 12, S670 or 670.
Right. Yeah.
I'll run a 95 corn special, but I am not running a 2012 S.
Yeah. With the current state of the market, where it's at, and the amount of machines that came, especially 24s, right? Especially 23s. 23s is some stuff, but 24s way more. It's like a little microcosm of that again, where this slug of machines might stick around for like 7 years.
But that 12, I think that's your 22s, 23s, not your 24s.
Right. Yeah, I agree with you. Yeah,
24s is going to be the numbers all line up. 22's a 12, 23's a 13, 24's a 14, where the 14s were, a 14 will work. I'll do a 14. I don't want a 12 or 13. That era, right?
Yeah.
So that's kind of where we're at. Plus, you had enough tweaks to the features and benefits going into 24 that makes it that much more appealing.
Right.
So that is at play quite a bit too.
Yep.
I know our, we do a lot of dairy fleet stuff. Very, very nice, clean tractors when they come back, but that's what they did, and they're dairy spec. You don't need ILS and massaging leather to run a mixer wagon. But even those things, because of what they are, how they're spec, it's not like there's a line of guys wanting to go buy them. But as soon as you throw a 24 on there, bam, out of here, bam, out of here. And it's like, a little bit. The slightest tweak changes everything. And then it's a backwards world where you exhaust your 24s and then you go back, dig deeper in the barrel, and then you start pulling out the rest. And that's how we shake out of it, everybody.
And the thing about the situation we're in too now is that, there's not a lot of 25s you're talking about. There's not going to be a lot of 26s.
There's going to be even less 26s.
You know what I mean? Because even if the market jumps back around and we start seeing a movement up, it's not like and it's going to have to take some kind of incredible movement to make this happen. But having a monster swing in the marketplace where, like, what brought the corn market out and the soybean market out of it, the doldrums that it was in basically from 2014 through 2020 was COVID, right? And nobody, oh my God, the world's coming in, and we're never going to have another speck of corn again. So it's worth $43 an acre or bushel right now, right? And because it went from, you think where corn was at, it was like 3 something to like almost went back to went over. I think it went over $7, almost to $8 there for a minute, and then it came back down.
It did.
But also that same fact, when the world was coming to an end in March of 21 or whenever we shut the world down,
the great shutdown.
It hit $3 because all the people were worried if it hit $2.99 that it was just going to be just a free fall, right? So it went from $3 to $7 or $8, whatever it went up to before.
A normal range.
Yeah, within like 6 months.
Double plus a third.
You know what I mean? And so in order to have something big, crazy happen in the marketplace like that, now it's something to that level that's going to drive the marketplace. Now, that being said, if you just get back to a normal marketplace where nobody's getting rich, no one's going crazy, and but they're making a good profit, right? And everything's working along the lines. That's when the ecosystem falls back into place like it's supposed to, right? New guys are buying new, 1 to 2 year old guys are buying the 1 to 2 year old stuff, and everyone's updating like they're supposed to be up and down that chain, that washout chain, right? And that's where I think 26 is going to be at for us when I look at the marketplace. It's not going to be, again, new guys are going to buy new, and those are going to be your big, large annual roll guys that do this every year. But even that's been scaled way back from what it was, right?
Oh,
that's not even remotely close to what it was, right?
No. Well, at some point it can't be.
Well, I know, right? It can't be.
And that's where we were.
Yeah.
A couple of years ago.
Yep. So I think as you watch this thing come together, I look at 26 as being like everything kind of falls back on the line like it's supposed to be, and we start working our way back out of this. To be really honest with you, I don't see a world, even when things are humming again, where someone's going to step back and say, hey, I'm going to go buy that new combine I've always wanted, right? Because how many times in your career have you heard the guy that's like, okay, this is the last combine I'm ever buying. I'm retiring. And he bought and then he bought that brand new combine for the last combine he's ever going to use, right? That's back when new combines were $235,000. Right? When you start looking at a brand new combine now, that's a Class 7 combine, $650,000, $600,000, and you go up from there.
He might go buy a quarter when he retires instead of a combine.
Exactly. But to me, that's when you're watching that. That's the situation that we're setting up for. That I really believe that you've got this new buyer buying new thing, 1 to 2 year old buyers and all stuff through, and then you start shoveling back in. The biggest thing that worries me about where we're at right now and the situation that we're in because of the price of equipment is it's just, I know I talk about a lot, upgrade kits and those kind of things and how awesome that's going to be for the marketplace, but it's got a huge backlash on the backside of that too, right? Because if you're sitting there holding, I'm just going to pick a planter because that's the easiest one to have the conversation about. Every planter now is in direct competition with every other planter, right? Whether I'm talking about the one I have in my shed, the one on your lot, the one coming out of the factory, the one sitting back in the hedgerow, like wherever it's at, all those planters are now in direct competition. It's not like, hey, I got a used one and a new one. That's your choice, right? And then I've got different flavors of used ones, vintages of used ones that I'm gonna put in the mix. I can take anything I want now, and I can make it almost the same that's coming out of the factory line. And I think that has a huge effect on where used equipment comes to play into the marketplace, into the conversation.
I think, and this is just personal opinion, okay? I sell used ones. I'm involved. I hear the sale of new ones. And I talk to guys all over the country. I'm going to argue with you on that yet again, because now, in defense of the puck, it is literally everything except the bar. The majority of guys will still go buy that new planter because and know that it's just the bar, but that's what they'll go do. And I think that will continue.
And I'm not saying that this like ceases to exist with
No.
equipment.
And
I'm not saying that.
Part of the reason for that is that the biggest part of it would be education. Okay.
Well, hold on. This is what's coming, folks.
You are now about to witness the strength of street knowledge.
That's Aaron. Okay, go ahead.
Okay. Now I don't remember what the hell I was going to say. You have it's an education thing. You might have a guy at a dealer group, okay, not a store, a guy at a dealer group who's really good with those. Okay. How many stores are in your dealer group? How many customers are at each dealer group? You start to do this backwards going, whoa, okay. You've had your planter clinics, your combine clinics, and talked about precision upgrade kits for 5 years, okay? That thing comes back to the dealership after you've sold the puck, run it a couple of years and whatever. Where does it land? It's not a 23, but it's not a 16 anymore. What is it? Okay.
Yeah.
The what is it is a complete, just like everything else. I wish combines were worth $650. They're not worth $450. Here we are. As much as we wish we set the price, the market does. Okay.
Oh, 100%. Yeah.
What is the market going to pay extra for that stuff? Because that's how the market thinks. The market doesn't think of, the market is looking at a puck like it's a 2014 with all the slap on stuff. Okay. That's how the market looks at a puck. The 30,000 in Surefire and Schlegel closers and all the stuff that is add on to your normal planner world. Okay. The puck is not that. It's a whole new planner except the bar. More often than not.
Yeah.
Times. The other thing with that puck is what gets upgraded and what does not has to pass. Like there's an inspection process in that. Is this good enough to puck, or do we need to
right.
Just certain parts of the puck?
Yeah. And you're going to have plenty of that. The point I'm making on that side of
but
that ball.
The buyer, I'll finish. I know I'm losing you.
Okay.
The buyer, he's not there. They're just not there. I've never had anybody excited about buying a puck machine.
And why is that? The simple fact of what you just said. It's just, if you have a 2016 machine, it's 2016 machine with 2025 technology, right? And well, you make it sound like, oh, this is a 2016 tractor with 2025 technology. That's a completely different story, right? When you say it's a 2016 planner, what you're saying is it's a 2016 bar, right? That's it. There's nothing more about that. It's no different than me going down to, Jim's Precision Ag, and they build a bar and then they hang the units off of it, right? I mean, it's the same thing, right? So my thing with this is that the puck thing is there's going to come a point in time when you're going to have, you have 3 levels of machine, right? You have the brand new one off the shelf, right? That's what you got. That came out of the factory line, brand new, everything, no scratches on the paint yet, still beautiful, whatever. Then you've got the used one, that machine that's been used for 5 years or whatever it is, that planner out there. Then you get the thing in the middle, that's the hybrid, right? Right. It's not, you got a 10 or 15-year-old bar with 5-year-old row units on there and all the stuff that's associated with the row unit. What is that? Well, you're right. It's not a 20. You can't say it's a 2016, but you can't say it's a 2025. So it's somewhere in the middle. But you're getting the technology that you're getting, and the useful life of that machine it's not a 15-year-old planner, and it's not a 5-year-old planner. It's however many seasons that you have on that planner, right? That's what you have now. Hold on. Now, if you look at where that comes into the line of how things are playing out, the reason I think on planners especially, the reason I think that you look at, I want to go get a new 24-row planner.
Right.
Go price a new 24-row planner and tell me how many people you can go sell that to, right? It's a $500,000 thing, $600,000 something, right? For 24 rows, which 10 years ago was, oh my God, what are we going to do with $225,000 planner? Oh my God, what are we going to do with $180,000 planner, right? Like, that was mind-blowing. Right?
Oh, yeah.
So now when you start looking at, well, I need to update my planner, right? I've got the useful life out of what I've got. I can go back and rebuild everything again, but is that juice worth the squeeze, right?
Right.
I can do that. Or do I need to look at how is various downforce and everything else, all the different stuff that's coming into that, how does that affect me in my marketplace? So for $600,000, $500,000, I can go build a new planner and get it from the factory, or for somewhere between $185,000 and $250,000, I can do basically the same thing with what I got. As that stuff, the price of equipment is going to, whether people want to do this or not, it's just like in everything else. The price of equipment is going to drive people into, I've got to upgrade to the next level of the next evolution of my farm, whatever that looks like. I've got to get there. I can't get it over here, right? I can't get it over here at the new level, but I can get it. There's like this level thing right here. Like, here's brand new off the shelf, and here's making it do what I needed to do when I needed to do it. And I think that's, when I look at this, that's what I see. And that's the only reason that I say anything about upgrade kits, is because
it's a
there
gap.
comes a level of time where you got to be, but it doesn't close the gap completely, right? Because even though you can say, quote unquote, all these upgrade kits and everything else, it's not exact. Some of the stuff's not exactly the same that you get from the factory, right? Some of the stuff it's close. It's pretty much the same thing, right? It's 95% the same, but it's not the same, right? And I think that's the big driving factor behind some of this. One thing I'll throw out there real quick. Good friend of mine, Nate Weishart, you know Nate, and he sent me this, and it was a Fendt tractor, and they actually have it set up now on their, and there's the screen. If you're looking at I forget the model number now, it's 1052, but I forget what the moniker is before that. So it's a 520 horsepower tractor. In the screen, you can now select the horsepower range that you want the machine to operate in, right? So if you want a 400 horsepower tractor, you click that. If you want a 520 horsepower tractor, you click that. If you want something in the middle, you pick that too. And people are like, well, why would you do that? It makes no sense. I now have a 520 horsepower tractor that gives me the versatility to maximize the horsepower I need to maximize per the job that I'm doing, right? So if I need 520 horsepower to pull a big tillage piece or something like that, I can set that so I'm maximizing the efficiency through the power bulge and everything else that comes along with that. I'm maximizing my fuel capacity, right? If I only need a 400 horsepower tractor to do the job, I now can maximize that all the way through the horsepower range and power bulges and all those things that come into play too. So I'm maximizing fuel efficiency through that. So instead of me taking a 520 horsepower tractor and putting it on something that only needs 400 horsepower, and now I'm just using a lot more fuel than I need to be using, I'm using the right amount of fuel for the job. That's, to me, it's a bit of a game changer, right? I have a tractor, and I'm going to hit the button as to what horsepower I need to have when. So instead of having 3 or 4 or 5 tractors on at a varying scale of horsepowers throughout the farm, I got 1 or 2 tractors now that I can have doing the jobs of 4 or 5 tractors that we're doing in there. So that's another level of efficiency. To me, that was, pretty impressive to see that level of stuff come through.
I would argue that we fixed that in the 90s. It was called shift up, throttle back. Sorry. Been there, done that.
Yeah.
Shift up a gear. Don't run it so high.
And I agree with what you're saying, but when you start looking at when you're truly dialing it in,
well,
for the fuel for the fuel efficiency,
you're basically detuning it to the job.
Right. Yeah, and you're selecting the horsepower range. So, if you're in a You start looking at that across. If you have a 250 horsepower tractor down, let's just say that down to 150 horsepower tractor, right? Well, I need 180 horsepower to run my baler, and I need 150 horsepower to run my mixer.
Right.
I'm maximizing that tractor all the way through those jobs. And that.
Can I finish since you poured water all over, man, I was all jumpy,
Sure.
ready to go. My last comment on puck education for the producers. I think this is where it clicks, because it clicks in my brain. Glider kit in a new semi. That's the best analogy. Because you can, guys would take a 2018 379 Pete, and for whatever reason, it's got a 3406A model in it. How did that happen? Right?
Mm-hmm.
It's the same thing, only backwards with the puck planners. You're doing it backwards of the truck. On the truck, you don't want all the technology. On the planner, you're adding it.
Right.
But a glider semi is a really good way to look at the precision upgrade items.
Yep, that's a great point. Great point.
Glad
all right, man. I'm so glad to. So glad to. All right, man. Good place to stop. If folks want to get your High Plains wholesale deals, what's the best way to do that?
Well, you catch High Plains Wholesale on TikTok and Facebook. It has a Facebook page. I share the same videos on my social, on X, and also Facebook. And you can find me also on LinkedIn, all by my name, Aaron Fintel, or you can call me or text me, 308-760-1193.
Right on. And you can find the Moving Iron podcast on AgWeb, and you can go to the podcast section. You can pull it down there to listen to the audio version of that. You can also go to Farm Journal's YouTube channel, and you can see the video version there. Also on AgWeb TV, Farm Journal TV. You can check it out there as well, and you can see there as well as everything else that's out there. You can see, I think, every Machinery Pete video that's ever been made in the on-demand library. So check that out. You can find me on Facebook, Twitter, Instagram, LinkedIn. I don't know where else. TikTok, I think maybe. All at either Moving Iron Podcast, Moving Iron LLC, or by my name, Casey Seymour. You find me there, and check that out. See all the stuff there. I want to thank Greg Machinery Pete Peterson, Sean Hackett, and Aaron Fennell for being on this edition of the podcast. And we are recording this today on Veterans Day, so a special shout out to all the veterans out there, Army, Navy, Air Force, Marines, for all the first responders out there, all you guys that help keep America safe. I appreciate your sacrifices as well as what your families have done, to support that mission as well. So with that, I am Casey Seymour. It's going to be some iron, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.